disclaimer here, and let me see if I can get my hands on this so that we're in good shape. Here we are. We need 15 seconds of reading this according to the parameters. And so here we are. There's a substantial risk of loss in trading. Vector Traders Consortium, nor any of its principals, employees, or partnerships makes any recommendations to trade any securities in any marketplace at any time whatsoever. We offer our services for educational purposes only. And you can go on and on and on, but since this is recorded, we are now covered very well. So the first thing I want to talk about is the volume as compared to the prices. The second thing I want to talk about is divergence analysis and how critical that is to determining where the smart money is really gearing up to create a high probability, a true high probability market turning point, and then how we can replicate those same techniques that you're taught on an end of day basis in real time. So we're going to keep that explanation short for now and start to go right through the charts. We're going to use YM, the Dow E-mini futures, end of day charts updated in real time. The market's now closed because it's Saturday. And this is the proxy for today's presentation. YM, near contract month 622, upper left hand corner. So let's begin with the volume chart. And here we are. I want to reference this area right here. Now we're looking at a pivot point high candlestick charts that was created at this point and another here, okay? So the thing we want to focus on is, in this case, right here, where we have a dry up, a volume that took place right before this was actually formed right here. Okay, so here's your dry up on the volume as compared to the prices that are moving up with nice uniformity, by the way. And then we have some volume that comes in here right at this point, okay, on 11.5, and then that's a blow off, so prices start to move back down. Prices trade down sharply, they move back up, and then a higher pivot point high right here is established there. So we want to look at the relative comparison, and again, it's always the relative comparison, of one thing to another, technically speaking. And in this case, it's the volume dry up, the larger contract sizing that comes in. Although it's not extremely high, it is higher than what appeared for quite some time. And then the prices fall down, the larger volume contract sizing comes in here again and again here, and prices slam down, okay, on a major 3-day sell-off. Okay, where the prices start to trade back up again, here, we have another dry up at this point on the move up, and then more contracts come in here at this juncture, where this pivot point high is now established. Larger contract sizing comes in again. We have a strong probe, a future directional price movement probe here, and then the floor is broken and prices trade down sharply right here. So here's how the lack of volume affects the exhaustion of the price move. The lack of volume acts as an exhaustion here. Larger contract sizing in this case comes in for the blow off again, and then prices start to trade down. Now, does everybody fully understand that, or the basic idea of that? Can I get a raise of hands? Because this is important. Okay, good. So now let's go right into the money flow chart in a subgraph below as compared to these prices, same data points. Here we are. Okay, so again, F2, let's take it from scratch, draw a trend line right in here, like this, raise it up. The highest open or close is my point of origin, and here is connect point number 1 right there, POR, CP1. Now let's take a look at what a divergence really is, in this case a negative divergence. It's where we have a lower price and a higher price within the price action itself, the past as compared to what was the present at that time. And in this case, we're looking at the relative comparison of the indicator's peaks, the strength of these peaks as compared to those exact or very close to near price points. So here we are with my connect point here, and here's my connect point, here's my point of origin. So now we can immediately see that this is the highest level of strength that the market had here at this point. Now the market trades off sharply and moves up again, but the indicator value at this point is way, way, way lower, diverging downward from where the prices are trading up on what we now know are inflated highs. This is a key here, traders, at all levels. We're looking at what the short-term money has to say out of the money flows index on a 14-period look back, and we're looking for the setup, the aftermath of between what the volume just said as compared now to the MFI indicator and what the realities are of this setup following through in the form of this major market turning point setup that either will or will not follow through. And in this case, obviously, it did. Now, the higher the trend line on the prices and the lower the trend line, okay, slope of the trend line from its point of origin to its connect point as compared to here, the stronger the negative divergence becomes. Are there levels to negative divergences? Can they be categorized by their strengths? Absolutely. That's something for down the road in the course or mentorship program. So listen, now we have a very clear view of what is more than likely going to happen out. Now, traders, we need to be on the right side of the market 80% of the time. In our case, we're there pretty much 90% of the time, all the time, in order to be able to take advantage of a major market down where you have a multitude of days, where you have a multitude of opportunities to take maybe 3-4 trades a day every single day, because you know that there's so much pent-up selling pressure behind the market and what the prices are saying as compared to what the largest institutions are doing, right? Where they're going, how strong they're in, how strong they're not. In this case, how strong they're not, and they're ready to go south. That this is what you've been waiting for. This is what you work for every day. So I'm not going to belabor that point. Here's the primary example of a negative divergence, of valid negative divergence, technically speaking. And now, where most traders are only looking at one money flow indicator, right? We're looking at two. So here's a copy and paste on the trend line, and here's another strong negative divergence out of the CMF as compared to the prices. Now, I'm not going to get this exact because I don't want to chew up all the time here. Now we have two different indicators with mathematical computations that are markedly different, giving us the true picture, the mechanics of what are going on behind the prices, right? That say, okay, now I have something else. Now I have more case evidence that this market should sell off. It's not a guarantee, but now we're getting closer to 80%, aren't we? Yes, we are, maybe even more. And so here we are. And our confidence level in what we're looking at and how we're going to act on it increases significantly. Long-term, smart money, institutional indicator of what these people are really doing with a 21-period look back, different mathematical computation, and updated every single day. Okay, so now after we have that, let's go take a look at the CO, right, and see if we have anything there. We may or may not. I'm not sure yet. Let's take a look. Well, in this case, we do. It's not quite as strong, but the Chaikin oscillator is geared to a mathematical objective computation that has to do with accumulation and distribution pegged to the MACD moving average convergence, divergence indicator. So here we are. Now that's 3. That's 3. So now we have multiple intermediate term, 31 to 91 days, right? Negative divergences. So our case is building like a lawyer walking into a courtroom, and he already knows that he's won because he's well prepared and has left nothing to chance. And then from there, it's just a matter of going through the rest. You know, the SMI here, do we have anything there? More than likely. Now, this is a price-based indicator, has nothing to do with money flow in or out of the market, short or long term. This is, in my opinion, the best indicator to confirm change in direction of the market, because you not only get what stochastics is pushing out, you get the momentum side of it in orange here, and you get the cross from above to below, and look at, we're at the overbought territory here. Great indicators are at the upper region of their subgraph territory in order to provide us with a long ride to the downside. So there is one more. And if we look at, now this is my own actual workspace, okay? Here we are again with one more. So in essence, this is how we want to identify with a high probability market turning point, build our case evidence to the point where we really don't have any doubts as to what's going to transpire here. Now, once you're sure that the setup is there, then we need to start to take a look at some of the areas where we might have, a floor that we need to get through to change our bias. If, say, we're long level 6 here, a minor trend to the upside in its infancy, right? A weak uptrend here. Now we get the blow off, things turn back around. So at this point is really where we need to start taking a look at, where the floors might be that we need to get through in order to deal with this, trade this, right? So that would be the first opportunity here. And look at here, you have your price chart pattern uniformity to the upside. So more than likely, here's your second, right? Your second leg coming through, and you're nonstop on an end of day basis. Okay, your price profit targets to the downside would have been here on a longer term basis, and then again right here, and then again right here, and right here. So the shakeout below these levels here was where they did a lot of what they do best, taking out the stops from the longer term traders, investors here who believe that the market's going to continue to move to the downside. But now we can already see that we're bottomed out, and this indicator is starting to turn back around after the strong negative divergences across the board gave us a multitude of opportunities to make buku bucks in about a week's time. Every trader knows, who's only been in the business a few years, for example, that the most amount of money to be made is at major market turning points, but they don't know how to deal with this. They don't know how to get at 80 and above % to say that, you know what, okay, now I can go short a stock, now I can go short, a mirror fund, ETFs, trade futures in real time, right? They have no idea that this level of information, this interpretation of these canned indicators you can get out of any program, right, are essential. They're critical to be able to capitalize on the major market turning points, because that's where you're going to make the lion's share of your money. We're all in there hacking it out every day, or better said, trading every day, and trading only the true high probability trades, just like the true high probability market turning points. But when this happens, this is really what we're looking for. And then before I forget, the course that has its lowest price it's ever going to have, and it won't be repeated until 6 months from now, does a complete walkthrough of the major market sell-off in 2020. It literally dissects that sell-off And there were multiple negative divergences in every single indicator that I just went through. The case evidence was so clear, as you'll see. It was undeniable that this was going to happen. That market turning point for that major sell-off was over 95% from our end, and we played it. And all the traders that have gone through, the programs here, they traded it too, all across the globe. So it's basically, it's matching and modeling. I mean, when I was young and I was going through this, I really didn't have a person like me who took me under their wing, who literally mentored me. There were people who I met who gave me some information, and one guy in Boston in a major firm, I talked to him, after the market closed, and he said, listen, you're going to have to find out a way to find out what these people are doing, where they're moving, and when. Because if you don't, it's never going to be the same for you. I mean, this is a guy, who probably could have hired me to be a trader for the firm down the road. But he said, you're never going to do that. He said, you're going to be trading for yourself. I know it. See, these guys are extremely smart. They know how to read people left and right. They're no slouches, and that's why they are what they are. They have this sixth sense about people. And, it was clear. So for as hard as it was, just to finish up my story here, the divorce, losing, that out of my life, throwing the furniture through the closet, you know what I mean? When I couldn't get a straight answer to a straight question that somebody from TradeStation who's now supposedly famous today, right? Because you're pulling your hair out. Has anybody else done that? Let me see a raise of hands. I'm sure there's plenty. You don't have to. I already know, right? Because of the frustration, it's all part of it. If it was easy, everybody would be doing it. And everybody would be making a lot of money. But that's not the case. So let me see where I'm at here for a second before we get off track. We did the volume analysis. We did the divergence analysis. And let's get into some, before we get into, we're doing good on the time. We're 10:52. Before we get into the real-time workspace, now these are all my own workspaces within my own program. I just want to talk about technical analysis versus fundamental analysis, for a moment, because it's critical to hammer this home. Because there's some of you who still include some news or some fundamental reports within your trading. And from our side of the fence, the majority of that is not necessary because the technicals would discount what the fundamentals are saying and ahead of time, like the market sell-off that I just walked through, or 2020, or the next one that'll come down the road. So when we talk about technical analysis versus fundamental analysis, what are the reasons why I should learn this? Why should I work with the VTC, right? I mean, technical analysis by definition is study of price movements within price charts, right? We're talking about trend lines, volume analysis, chart patterns, mathematical indicators based on price and time to show us how to determine the current state of the market or security and the greater possibilities of their future directional price movement, right? There's two main methods to analyze the markets, securities. There's fundamental and there's technical analysis. Now, as traders and investors, we know that fundamental analysis focuses in on arriving on a valuation, per se, of a security. By using a company's own data, you're talking about employing various models in the hopes of determining, its real worth at that moment in time, right? Then it's going to attempt to forecast a future price level with that security or that ETF or whatever that is that you're trading might arrive at in a certain period of time based on what those models have provided. Now, even the best, listen to me carefully, even the best of economic research departments know that these models are subjective in nature. And, they may not allow us to determine if there's a real opportunity for us to trade or make money or not. And that's good for them because they want your money. Not good for you, right? So The only people who really know what's going on the fundamental side in those institutions is the inner circle. That's it. And I am referring to the insiders. I'm talking about the smart money players. These are the people who can and do move prices from one level to another. The market is completely manipulated. Once you get your head around that, right, you have to figure out how to reveal them, how to get behind the market, like this company was called the Inside Technician years ago before it morphed into the Vector Traders Consortium, right, 12 years ago. I mean, these are the players that have the real information. They do not want to disseminate it. So technical analysis, at this level is the preferred method to use to determine if a real opportunity exists or not. And why? Because it's 100% subjective. It's black and white. It's based on truth. It is not subjective, right? It immediately reveals, the true supply and demand of a security, regardless of what the fundamentals are or the news is saying, as trying to take you out. Okay? That's it. So when we know how to deal with this at this level, in real time, okay, and individual stocks, mirror funds, index funds, ETFs, futures, right? We have a level of confidence and conviction that allows us to be able to trade that really only, if best, 5% of the traders in the world have, right? Right. So, does everybody understand? Could I get a raise of hands? The significance behind what I'm laying down here, because this is critical that you understand this, so you can act on this in a way that you can actually make a living off of, and a lot better. Okay, thank you for the raise of hands. By the way, there's over 200 people in this room right now. A lot of them came in a couple minutes late, right? And they're still here. Capacity is 250. I think we're at 210. Yeah, okay. So that says something right about what we're doing. Let's see here. Okay, let's proceed. So again, I have trained several Wall Street traders on how to identify with the major daily levels on the charts, incremental levels on the charts, measuring points in between those, so that you learn how to use those major daily levels on your daily charts, right, in real time, to be able to know when you have any free and clear areas, so that your true high probability trade selection is within the parameters of where there's no resistance to the upside or where there's no resistance to the downside, and you have a previously established price profit target to get out on a rally. This is probably, when you get to that point, whether it's stocks or any instrument that you're trading, again, the most important thing, because a lot of traders have an idea where to get in. They got a pretty good idea, but they have no idea where the hell to get out of a trade. It's already hit the price profit target. The prices are moving up and they're sweating, literally, because they got a lot of money in line and now they're giving a lot of money back that they just made. So you need to know where these price profit targets are ahead of time, how to identify them, how to lay them out so that you get on a rally in at the best possible time, out at the best possible time. Everything is known ahead of time so that there's no surprises. It's redundancy. If this happens, we do this. If that happens, we do that. And it just goes until there's no more scenarios to run. This keeps your emotional capital, which is important as your monetary capital, right there, fresh all the time. If you deviate from that, then things are going to change and you're not going to like it. So this is a very strict business. And the discipline that you need, you'll also get by going through this. When I discovered the major market turning points and then how to do that in real time, well, my life changed dramatically, because I was struggling with the same thing you're struggling with and a lot of traders are struggling with. So before we get into that real-time workspace, I want to see if I can get a partner in the room here. And I want him to introduce himself. His name is Louis Esselin. Louis, are you there?
Yes, I'm here, Jeff.
Okay, can we get just a little more volume out of you, maybe?
Well, I'm sorry, that's about all I've got at the moment.
Okay, it's good enough.
All right, can everybody hear me? If you could raise a hand.
They can hear you.
All right, I hope they understand my South African accent. Anyway, all right, thanks for inviting me, Jeff, and hello to everybody. My name is Louis Esselin, and I come from South Africa and currently live in Bangkok, Thailand. I'm an authorized affiliate with Jeff, with his E-mini S&P 500 expert market timing course. Now, my background is quite a lot different to trading. I've been a PGA professional for the last 32 years, played on the tour for a short while before specializing in teaching. I discovered the fundamentals in golf are very similar to trading in the sense of how people learn and the practicing the basics that they learn. And I believe that golf also with trading is very much a 90% mental game, especially emotions. And you all know what emotions can do. We're all affected by it. So I take a special interest in how people learn and especially how they use what they learn. That's the important word. My interest started in Forex trading actually about 8 years ago, and I attended training with 2 different trading professionals. And their courses were good, but nothing like what I've experienced with Jeff. 7 months ago, I was searching the internet, looking for real professional trader training because I was looking for affiliates to sell their courses. And I came across Jeff's site. So I contacted him with the idea of selling his course. And he was more than willing to talk. So I absolutely loved what I saw the first sight. And before I promoted and sell the course, Jeff said to me, hey, I suggest what you do is do the course yourself so you understand what I'm about, what we're about, and how these pieces of this puzzle fit together. And I thought, wow, this is a great opportunity, which I really don't want to miss. And I agreed to do it. And but, you know, what I really found interesting in the whole process was this technical analysis that you're watching right now. And I couldn't believe actually how quickly I could learn what he's teaching now or showing you now in such a short space of time. So I just want to say that Jeff holds nothing back. He's fully transparent with everything, like I think you're experiencing already. And in a way, he's scary because he's not only a true professional trader, he's a great communicator, all right, and an analyst. So he's top of the pops. And the other thing too with me was, and I'm sure he goes like this with all his clients, he goes the extra mile. And I'm forever grateful actually for where we crossed paths. But I want to read you some testimonials. And it's quite interesting because some of them are 12 years old and there's a recent one. And they all basically are pointing that, you know, the time-tested, proven product that we have, it's just never going to go out of date. So here's one from Diane Harville, and she's a full-time E-mini futures trader. And she says, this program was very straightforward and comprehensive. Working directly with Jeff allowed me finally to understand how a real professional makes money in this business. Inherent risk control by excellent initial stock placement, combined with well-defined trade selection, from the setup to the trigger to the follow-through, and managing the trades in real time. Nothing was left undone. Top-notch professional from head to toe. There's another one from Jeff Lawrence. Thankfully for some market volatility, has handsomely rewarded our efforts during the last several weeks. Jeff's energy is genuine and ability to convey information is nothing short of phenomenal. He's that rare individual whose knowledge is much more than book or theory smart, but is the result of being there, done it, and guess what? I'm still here doing it now. Amazing, after almost 12 years, the trading formula you taught me remains the unwavering foundation for my success. Never second guess your fib levels. And here's one from Larry Jacobs, who's the a past trading champion and editor of the Traders World magazine. And he says, I recently spent 8 hours training with one-on-one with Jeff. He's by far one of the top technical analysts in the world today, and clearly showed me how a trader or investor must first become an expert market timer in order to profitably trade stocks, ETFs, mirror funds, and futures in real time. Superior analytical and community of skills combined with being a real-life professional trader set him apart from all the others. It was a real pleasure to work with him. And now recently, I think about a month ago, we got one from Bill Zidel. I'm saying his surname correctly. Thanks for the update. I've been studying and review the course and videos often. Each time I review the videos, I pick up something I missed during the previous sessions. I still paper trade and learning a lot. It's amazing how the market expects those price levels which have been previously laid out. And somehow, magically, they try to test them. It's obvious how rigged this market really is. Looking forward to success with your trading techniques. And that's all from me, folks. Enjoy the rest of the session with us and stick around for the end to the question and answers. And back to you, Jeff.
Appreciate you joining us today. Thank you so much. That's Louis Estlin from Thailand, former professional golfer and golf pro, and a great human being as well. Now, can everybody give me a raise of hands? They can see my real-time workspace now while I'm NCM 622 again, just to be sure. Okay. All right, good. So now we're going to refer back to the 4th, April 4th. Now this is the overnight session. You know, what I gave you was the model that I'm going to teach you in this course, all right, or in mentorship programs, of how to identify with negative divergences, okay? Now that was a daily chart representation across the board that identified a major market turning point that followed through for the shorts we just copied you out on shortly ago, using the MFI and the CMF, okay? Those same techniques, the trend line, upsloping trend line, connect point to the prices on the top, following the same process in real time. Here's your lower price, here's your higher price, right? And here is your first negative divergence that's coming out of the MFI with a 12-period look back in real time. CMF and the next subgraph below is right here with a 19-period look back. And here's your secondary, right, negative divergence out of the two most, in my opinion, important indicators that get behind the prices. So, you know, back in the day when we were the inside technician, you know, the motto of the company was find, track, and trade the smart money. And you know, we're thinking about just using that again because it makes perfect sense, you know, for any future stuff that gets out there in the street. And because we want to get behind the prices, you know, like the Wizard of Oz is controlling everything, which is the smart money. And you open the curtain, you see it's just a guy pushing a lot of buttons. That's exactly what these people are doing. They know exactly what they're going to do way ahead of time. And we're right there with them in real time. So here we are, negative divergence setup, strong ones too. The 5-minute chart, it's a 5-minute chart we're looking at. Are we using 15-minute charts? Yes. This is the sake of example that I want you to see, okay? And it's not curve fitted because the 15s were set up to go short too at this point, right? Well, let's look at it. And here we are. So this is a move that tapped out on inflated highs, turned back around, and shot down quickly. Now, every bar is 5 minutes here. So you're not going to see the entire move the same way you would on a 1-minute chart, which I will get into shortly enough, okay? All right. So that being said, I want to take a look at the overall market for just a second here, right? And try to determine, if you will, with me, what were the other elements that were needed in order to be able to make this happen. So where are we going? We're going to the volume, right? The volume. And we want to make sure that we have an opportunity to see how the volume may or may not have changed at that point, right? What time is it here? What day is it? It's the 1st, 2nd, the 4th. There we are. So now, here's the up move, and here's the down move on a 15-minute chart, right? Look at where the volume came in on the 15-minute sell-off here, previous to anything in the future. That's the 31st. Was there any strong accumulation volume that came in that pushed the prices up on any strengths? No, there was one more sell. This is mixed at major daily levels that were laid out at a time. And that's the reason why the program trading came in here. All right. So no real strong accumulation, which means that the market bias, it could change in real time, couldn't it? Absolutely. Absolutely. So here we are. Let's take a look at, this is my real 1-minute chart that I use in my real-time workspace, right? And this is the same point in time that we just identified on a 5-minute chart with the MFI and the CMF under major negative divergences, okay? Here are the levels similar to the daily chart that I had laid out, right, earlier, but on a 1-minute chart. Every bar is 1 minute with a black background all behind. You could look at this chart for 15 hours and your eyes will never get tired. Everything is done for a reason. Here's the break, the first break. Prices move sideways. The overall market now is not net neutral anymore. It's short level 6. And you're waiting for the larger contract size and come in to get through this level, okay? Or more like here, when the European overnight session kicks in, what's the aftermath of that going to be? Are they going to start this whole party off for the short? They sure as hell did. And that's when things changed dramatically. Now again, what you're looking at here is not the picture perfect example. I won't do that. I'll take a more difficult market environment with the real-time trade setup because I want you to see it's not just once a week. It's almost an everyday affair, making profits, generating real income. So in this case, I mean, only 5 contracts short. You could have tried it out here. You could have tried it out here. But then this is where the party begins. The larger contract sizing comes in here. The European session opens. The market can't trade up and get through here because what? The smart money bias market trading call, your bias for the session. Our smart money bias market trading call that puts a stamp on the U.S. market every single day says now we're able to go short level 6. I'd rather trade short than long. And there the setup comes through and the prices fall right through here. After the prices can't move up again and trade through 34,759, they get through 34,734 and they never look back, never. And there were thousands, if not more, thousands of dollars that were made, could have been made by you if you knew how to deal with this. So only 5 contracts. Right? Only 5 contracts. So again, knowing the end of day charts clearly showed the weakness, right from the screen. The high probability market turning point was now set up. Your smart money bias market trading call now changed to short level 6 in real time. This is how a true professional identifies a real opportunity in the form of a true high probability trade that's greater than 80%. People, we need to be 80% or greater on every single trade in order to be one of the best. That's it. That is exactly it. So, a few minutes on this, and then we'll get right into the question and answers from all of you. And I invite you to ask me questions. Please do. Get them geared up. Let me take a look at this. And let's see where we are. Okay. So in the chat room, there is a link to the URL for this course. It is the S&P 500 Mini Futures Exit Market Timing course that explains in great detail with 8 different modules, approximately an hour apiece, right? Exactly what you're going to learn. A couple examples on trades, risk control here. This is the culmination of, 25 years worth of trading boiled down in a course. This is much more than a foundational course. This is something that you can extract information out of that becomes actionable intelligence. That term is overused in today's world, but basically what it means is that every single module, you're going to learn something you can put into practice in your trading immediately. On demand, 24 hours, 7 days a week, no matter wherever you are, you can study. So phone, laptop, desktop, wherever you want, internet cafe, you're good to go. And the good news is that when this course was administered, it was $24.97. The website price, which I'm sure most of you have already been there, is $14.97, and it's going to stay $14.97. But in this webinar, our non-published special offer price only here now is $9.97. That's as low as it's ever going to get, and it only happens 2 times a year. So my imparting guidance is to take advantage of it. Use it. If some of you are looking to get out of what you're doing, this is a perfect way to start. It's harmless. It's almost costless. You study, you go to work, practice, and every day you get a little bit better. You get closer and closer to leaving your job that you can't stand, or in a rut, maybe from another direction, right? The most important thing that I was told years ago from one of my mentors who had nothing to do with trading is align yourself with people who are where you want to go. And get rid of the people who drag you down, draw on you, the parasite people, the negative people. He said, when you have away motivation and towards motivation, that's when you become unstoppable. So what we're talking about is here, I don't want to do that anymore, like I was. I don't want to do this job. I don't want to be in that relationship or whatever it is, right? In this case, it's a job or it's a situation, income-related situation that's just not enough. And I also want to do something. I have to do something to make it happen, to change it. We can't live in denial. We have to deal with life on life's terms. And this is what you do. And this is how you can start. Now, today. I know people, I know Bill Zidel, he's been through those modules, if not 7, 10 times, every one of them, right? There's all the articles I've written, presence, wherever we've been, it's all been on the money. I think I wrote 4 articles for Traders World, 2 for SFO, India, CNBC, Bloomberg, short stuff. It's all there. It's all real, fully transparent. So the thing is here, you're following a structured, learnable, and repeatable process. That's it. Won't cancel itself out. Time-tested techniques that are going to give you, like I say on the website, an unfair advantage that only a handful of traders will ever have. Okay? Okay. That's it. So let's open it up for questions. Let me get back to the attendee area here. Okay. Questions, put your hand up. Put them in the chat box, right? And let me know. Just type it right in the chat box and hit the send, and I'll get it immediately. Go ahead, send them off. Anyone, any questions, doesn't matter. I can answer it, I will. Okay, one question says, how long after I take this course can I expect that, I'm going to be highly proficient? Okay, well, number one, it's going to depend on your commitment to yourself, how many times you can study, take notes, because every time you go through this, you're going to pick up something else, right? But if you're studying hard for a month, there isn't any reason why, if you keep studying and then you paper trade what I'm teaching you in this course, right? There isn't any reason why within a few months' time you shouldn't be able to at least break even, if not be moderately profitable, which most are, with your new information. That's it. 3 months, and then you have nowhere to go but up from there. Another question in on mentorship programs. Yeah, if I buy this course and then I come in for a mentorship program, can I get a credit for the course? Yeah, we'll give you credit for the course against with the executive mentorship programs. No problem. A lot of true full mentorship programs, they cost $15,000-$20,000. If you're with somebody who knows what the hell they're doing, and they're not even doing this. I know it because I know who's out there. The point is, you won't pay that here. A lot less, an awful lot less. I'm going to talk about prices here. I can't do that. Another question. How would I deal with program trading in real time? My quick answer is, when I know I'm in program trading, when the volatility gets too high, when all the algorithms have kicked in, and there's just high frequency orders coming in rapidly, it's untradeable. I won't trade it until I'm sure I'm out of program trading, which is exactly one of the points that I teach in this course as well, because in order to get out of program trading, usually, you're going to have to get above a major daily level, right? That's been established, a major resistance level, right? That you've got to get through and follow through. Right when you get to that level, you're looking for some price chart pattern uniformity, which I teach you how to identify with, because it says, the prices say, the people behind them say, that's it. We're going to switch what we're doing here. We're going to tip our hat to those who know what to look for, excuse me, and we're going to go long above this resistance level with a lot of volume coming in. Again, the more volume in at the preferred entry price on a trade, or at the price profit target destination, the better off you're going to be. If you're not a high volume trader when you're in, then you're just trading prices. And it would be the same for the downside. Once you get to your preferred entry price, like I showed you the area, the floor in the 1 minute chart, then you're going to be looking for those larger contract sizings to come in. We have proprietary indicators that identify with that, 3 different ways to look at them, right? So we know we're sure that it's institutional trading, and they're the ones who are directing this whole thing, right? And then you're going to go short out of program trading through a superior support level, major daily level, right? With a lot of volume, high volume, larger contract sizing come in order to get through that level and follow through. This is the key. This is the key here. So, well, it's 11:24, and I think we have time for maybe one more question here, maybe 2. What does short level 6 mean? Okay, we have a way, this is coming from Michael K. We have a way here, we teach you the means to identify what's the current state of the market every day. In other words, there's going to be days when the market is net neutral, moving sideways, and you can trade short or long within some daily levels, right? The market might be a little tight, but still tradable on a daily basis and still can be profitable on a daily basis. In order to get out of a net neutral channel, so to speak, right, the market has to go long or short Okay, as soon as it does go short, after the type of short setup that I showed today in both cases, you get through that floor level on an end of day basis, and yes, again in real time, you immediately get out of net neutral, and now you at the infancy, the first beginning stage of short. Now, as the market picks up speed, right, on an end of day basis, that level 6 out of net neutral could go to level 7 with increased strength, or level 8, or even level 9 on a major market sell-off like I showed earlier, or from 2020, like the course walks you through how to deal with that. So it adds a level of confidence and conviction to be able to say, okay, I was net neutral, now I'm short level 6, because in net neutral there is no 1, 2, 3, 4, 5. That's it. We have determined that labeling it, categorizing it, putting a smart money bias market trading call on the strength of the market, whether it's net neutral, whether it's short level 6, 7, 8, 9, depending on how much selling comes in, or if it's long, how much buying comes in. Are we in a strong market? Are we in a moderately strong short or long market? Where are we at? And that directly relates to how many contracts you want to trade and how many shares you want to trade. Excuse me. So there's a lot of logic behind crossing the end of day analysis bridge right into real time. A lot of traders have no idea how to deal with that either. Another question. Nope, that's it. Okay, we're good. A couple people said they will call. It's amazing. There's already been 7 of these courses have been sold. Now that's a lot of actual proof. So excellent. You get 20 minutes with me. When you're finished, troubleshoot you out. We can even record a webinar and do it. So for those of you who are not aware of that, that's something that you can look forward to at the end. Get all your questions squared away, and we'll look forward to helping you the very best way possible in any of your educational needs. This is Jeff Killian for the Vector Traders Consortium. It's really been my pleasure to present to the world today, to all 200 of you who are still in this room, and we'll look forward to seeing you on the next event. I'm going to leave the webinar room open so that people can review the course sales page for another at least 20 minutes or so, and then we'll close out after that. Thank you, everyone, again, for being with us, and you have a great day or night wherever you are.